Hi, everyone. Good evening and good morning to some who are out there. Um, I'm sorry, I'm actually talking from a cab, so I hope you all can hear me loud and clear. Just to give a brief on BOVCapital, it was created in 2009 by Rajan Anandan and myself. We basically, this company was created, the focus was to build entrepreneurship and empower entrepreneurs in the region and look at Sri Lanka from that perspective. Um, um, in 2009, when we started off, we basically started Gap Fund and thereafter created the Angel Network in Sri Lanka and then moved on in terms of creating the venture capital in 2016. Today, we have spent over $2 billion worth of funding, 2 billion rupees worth of funding with about 30 odd companies that we have funded. In the venture capital space, we are now regionally based. We have a fund out of Singapore. We have a fund in Singapore as well as in Sri Lanka. And we have been funding startups in the region. And up to date, we have done about 12 startups. So I'll give it back to Lathika and hope you all enjoy the show. Thank you.
Thank you, Prajit. And I'm sure that the slip from 2 billion to 2 million, was we all expect BOVCapital to be a $2 billion fund, right?
I hope so too. Yeah.
So yes. All the very best. Randula, over to you, my dear.
Thank you, Lathika. It's a massive pleasure to be hosting this together with Microsoft and BOV. Hatch is all about promoting and supporting innovation and entrepreneurship, not only in Sri Lanka, but in Asia. We're an accelerator, incubator, and a co-working space with more than 60,000 square feet in 2 of our properties in locations in Sri Lanka. And we have 2 accelerate programs, 3 incubation programs, and a maker studio in-house, and going beyond many local and international mentors and partners who really work hand in hand with us to help us achieve our vision to make economic transformation happen in Asia through innovation and entrepreneurship. So it is with partners like with Microsoft and BOV that we really achieve our mission together. So very happy to have you all here, this esteemed panel here to be speaking on this very specific and interesting topic. And more than anything, to have all of these participants sign up and go join in our live stream to be part of this program. Thanks, Lathika.
Thank you so much, Randula. I visited the Hatch facilities. I must admit it's one of the coolest co-working spaces that I've been to. So for all those founders who are looking for both a cool co-working space and for support, definitely Hatch is the place to go to. So today's webinar is about what does it take to get to product market fit for B2B and B2C startups. And with us, we have 3 phenomenal, I would say, experts in the region in this particular space. Joining us from New York is Gautam Ghandi. Gautam Ghandi and I have worked together most recently on the India Internet Day. And I must admit, the kind of panels he put together was some of the best. And for those of you who have not watched it, you should go and see in terms of the diverse, I would say, engagements he's had with startups today globally. Gautam has invested across various technology, B2B, B2C. The cool thing is it's not just in technology, he's also invested in cannabis startups. Gautam has a MBA and a bachelor's degree in computer science. He's also got a master's from Carnegie Mellon and a master's from the JFK School of Public Policy in terms of how technology and policies, come together. For those of you, and this was actually my first time when I went and read his profile in detail, what I found the most fascinating about Gautam's background is that a year ago, and we were messaging each other yesterday. He spent 18 months traveling to 30 countries, 80 different cities, meeting with entrepreneurs, artists, government policymakers to really understand, I think, what the world is all about. So as you can see, Gautam's background is phenomenal. It's, he really comes to us both from a investor perspective. He's invested in over a dozen startups in an angel capacity, and he's a LP limited partner in several technology funds. Gautam, thank you so much for being here with us today. And I know it's first thing in the morning for you in New York, so it's much appreciated. We also have two founders, one from the B2B space and one from the B2C space. From the B2B space, we have Imal, the founder of nCinga. Imal and I met about 18 months ago, and at that time he was looking very concerned, anxious in terms of growing his business. 18 months later, Imal is beaming from year to year. He's had a phenomenal exit with Zilingo that acquired nCinga. So for me, it's such a pleasure, to have Imal as being a part of the panel today. And Imal, coming from Sri Lanka, I think is definitely, someone that all Sri Lankan founders, I'm sure, are proud of and would want to emulate. So, and his journey is going to be extremely interesting for everyone in the region to understand what it takes in terms of starting to build a product, getting the product market fit, raising funds, and then also getting an exit. So he's been through all of it. Our third panelist today is Sachin Jaishwal, the founder of Niki.ai. I met Sachin about 18 months ago, and at that time he had a AI chatbot called Niki.ai that was providing concierge services. He did have a lot of people believe in him, including Ratan Tata, investing in him early on. But what was fascinating to me was that in 18 months from being a concierge service, that was being offered to people in urban India and tier 1 cities, he's pivoted and he has, hundreds of thousands of paying customers on his platform from tier 2, tier 3 cities in India. So, he's also been a founder with Innovator, a health tech company. So it really is, as you can see, we really have a very powerful panel with us whose, I think their expertise is going to be extremely, and experience and expertise would be very relevant to all those founders out there in the audience. So thank you once again, Imal, Sachin, and Gautam for accepting to be on this panel. My first question is going to be to Imal. Imal, you were a founder after you spent time in the corporate world. What made you start your own company? And B, when did you, achieve product market fit?
Yeah. Thanks, Lathika. To be back with you. But last time we were in meeting in Hatch, right, on a meeting room. So the first question: why did I start this journey on entrepreneurship? Because initially I was an engineer by profession, and I was in Sri Lanka, and I wanted to get working for multinationals and work regionally and see the world. So that was my dream. But when I was working for Cisco and then HP and IBM, then once I realized it's all the same for working for all these multinationals, right? I mean, no offense for people who are working for multinationals, but at one point in time, of course, you had a handsome salary, you are happy, and you travel the world. But I thought something was missing. And especially, I hate those weekly calls and asking, getting approval from 10 bosses before I can do something to make an impact, right? So I wanted to do something which I have like more freedom to express myself and to, go through that entrepreneurship journey. And by that time, like interestingly enough, in Sri Lanka, like, you have this the mindsets like you're out of university, then you're out of engineering or medical college, then people expect you to have a car, then you get into debt, and then you want to build your house, you get into debt, and your wedding, you take debt, and you come out of this debt spiral, after you are like spending another 10-15 years because there are a lot of loans to pay, right? So I could come out of it like when I was like luckily late 30s. So then I had a little bit of freedom and thinking of, okay, what can I do? So that is where I started. One thing is the pressure on the multinational life, which is coming with good money, but I thought I wanted to be a little more free. So that plus, I had a little bit of financial freedom when I was in late 30s and touching my early 40s. So at that point in time, I decided, okay, let me try this. So I was in Singapore that time. So I set up the company in Singapore. I had access to low-cost funding there, like grants. So I started off the company, and then I had my co-founder. He was my schoolmate, Vijay, and we started this company nCinga. And initially the plan was to, and he was also going through a similar phase. He was in US and he was coming back, and we all wanted to come back. I mean, similar to what Prajit discussed in his journey. So we started nCinga at that time. We wanted to build a product company, because we have seen how Millennium IT, that one of the other exits we have had in Sri Lanka, how they build a product company. Because as you can see in Sri Lanka, you don't have hundreds or thousands of engineers to find. You'll have few good engineers. So we thought we can build a product company with few good people. Like look at WhatsApp, 50 people, they build a world-class product, right? So we thought like we could build a world-class company with, less than, 50 people. And for that, we could find world-class talent. So that's how we started the journey. And initially, we wanted to build a industrial IoT platform. But then we realized being in the platform game is for big players. So we wanted to focus on our niche. So we kind of focus more on to manufacturing and more on to being as a data platform, right? And then within manufacturing also, we realized soon that we can't cater for all the different manufacturing. So we started focusing on apparel. So because if you look at all the global brands, like, be it Nike, Under Armour, Victoria's Secret, Gap, all these, while the brands are in Western world, we realize all the factories are right here in Asia, right? 80 to 90% of the factories. But who sells the software to these manufacturers? Be it SAP, be it Oracle, all these, or GE, all these are like European and US companies, and the manufacturing world could not afford this. And there were not many startups from Asia focusing really on the industrial B2B space, software companies going after this. So these manufacturers could not afford those solutions. Plus, it was not fitting this market, while 80 to 90% of the manufacturing has shifted here. So we saw that gap, and there we started focusing on that, laser focus on apparel manufacturing. And we had the domain knowledge in Sri Lanka. We that was a strength. So then we started focusing building this data platform for manufacturing, and especially targeting apparel manufacturing there also. So that's how we focus on that. When it comes to product market fit, we were lucky, like in the first year of our, again, it's not easy to achieve the product market fit in B2B. It takes time, because you do one change and the sales cycles are 6 months or 18 months. You don't kind of get the feedback of that change you made for 6 months or 12 months or 18 months, right? So you don't know until you see the results in 6 to 12 months whether you have done the right thing. So we decided we persist once we get the sweet spot, because we were lucky to get into one of few of the largest manufacturers like MAS Group and Ananta in Bangladesh. So these were few big customers we were in, and we realized that when we go in a factory, there is one manufacturing line to 20 manufacturing lines in a factory, and these are like having 40 factories by one manufacturer, and then you have thousands of manufacturers in Bangladesh, thousands of manufacturers in India, and thousands in Vietnam. So we saw the scale, right? So once we knew that we were getting good feedbacks on these large customers, we realized we were in the product market fit because we were building the product with them. We were getting constant feedback. For that, we were lucky. And the other thing is we knew from the background how to make enterprise sales, because of our backgrounds working in these enterprise B2B software companies or these multinationals. So we knew how to engage the customers. And we also had a lot of supporters who were giving us that opportunity. So that was a success, that when we were building, we knew exactly what to build because customers were giving us that real feedback. That's how we achieved the product market fit. And then we had that paying customer from the first year itself. So that gave us the confidence. And that was one of the largest manufacturers. When we go and say that we are in MAS in Sri Lanka, that was a $2 billion company, and the other manufacturers know that it can't be just some crappy product, right? So that opened up a lot of factories for us in Bangladesh or in Vietnam or in India, right? So I think, BOV and Rishi, especially, he had to convince me to take up that because I thought India was not a market that we could go and sell anything, because India is IT, capital of the world, and but we had a good product because we had the domain knowledge, and we were targeting in a niche which no one else was willing to go in because it was tough, it was underserved. So in that sense, I think we achieved the product market fit relatively fast, but then the scaling, that was the challenge with the kind of environment we were operating. So we can discuss.
Okay, great. Thank you, Imal. Sachin, over to you. You were with Innovesa, which was in the B2B space. Then you decided to start Niki.ai, which was in the B2C space. What has your experience been for product market fit in the B2C space? And Imal mentioned that he was lucky to have found a paying customer, right? In the B2C space, there's so much of money being spent in terms of chasing to get that customer to pay. So it'd be great to know about Niki.ai, what you did, what you're doing, and also how you achieved product market fit.
Sure. Thanks a lot, Lathika, for it. First of all, having me over, and let me quickly take you through our journey of a product market fit, right? And so yeah, basically, when we started Niki, we started with the idea that we'll build a world-class product, right? And obviously, we had no intent to get to a product market fit back then. Our theory was that we'll build a product and people will buy it. Of course, what do we need to do about market? And then initial stage when we started the business, we obviously had no iota of what a product market fit would look like, right? Because we had not done enough user research, and B2C is very different from B2B. In B2B, especially at Innovesa, when we started as a services business, product market fit was a given because the client would tell us what they want, and all we need to do was we just needed to find clients and ask them what their problems are. And then as we moved away from a services to product journey, it was a gradual transition which happened because we could understand from the clients what they wanted. In a B2C business, it is slightly difficult because, when you're looking to build a business for millions of users, it's very different to really pinpoint one user that you would build a product for. And that is a tough problem to crack, especially in a B2C business. And just to give you an example of the scope of the problem, right? So India has more than 1 billion plus population, with more than 600 million people actually having a smartphone and internet, and therefore a potential customer. Now, a population as big as that, the diversity is so immense. For example, someone like me who speaks English, my preferences, my needs, my desires are very different from that Lokesh, one of our user who stays in a small city like Kanpur, right? And then what is that common thread that ties all of that together? How do you find out what is that segment of the market that you want to build for? How do you analyze what is the problem that, what are the set of problems that you want to solve for them? All of that was a journey of discovery for us, right? And when we started out as a broad, open-ended product that we wanted to build for a large segment of the market. And then over time, we discovered, so for example, when we started out, it was a bot that people would use. And then over time, how we zeroed in on the market fit, right, is that we saw that there is one segment of market which was actually using it more often, although it was not really usable. So the earlier avatar of Niki, people would actually, chat with Niki in Hindi, in Malayali, and so on and so forth. And that was the eureka moment for us. We discovered that there's a large segment of market that, and because the number of such volume of queries were too high for us to ignore, and even though we did not support Niki for them, right, they were still coming to use Niki, and then we dug deeper. We asked these users the questions like, how are you using Niki? And all of them invariably said, we actually use the keyboard voice button and try to talk to Niki. And then we figured, oh my God, that there is a large segment of market that is actually unmet, that's unserved, and not being really catered to by any segment, any business per se. And then we dug deeper. We started doing more focus group studies to understand what pain points that they're dealing with. And it took us.
So Sachin, sorry, go ahead. No, so very quickly, so basically, it seems that you went through a discovery process in terms of starting with one path that you took, and as a result of a customer space segment that you didn't believe would be adopting your app had actually adopted it, and as a result you pivoted it. So that's great. I'll just come back to you after I just check, have a couple of questions for Gautam. Gautam, you have invested in both B2B and B2C startups, right? You've been with Google, you've been with Microsoft, you've done some really interesting work. What attracts you to investing in a B2B versus a B2C? Are they the same parameters that you look at for both, or is it clearly everybody says look at the founders, look at the experience, etc. So it'd be really good to understand from an investor perspective, since you have invested in both kinds of startups.
Yeah. First of all, thank you, Lathika, for inviting me to this panel, and great to meet Imal and Sachin. I just want to express my love for Sri Lanka. First of all, I've been there many times, and I absolutely love the country. It is so beautiful. As Rajan had told me, it's an island of happy people. Smile, be happy. And I had a very close friend when I was at Google. His name was Ranadu. He was a Sri Lankan hip hop artist, and he would where he was working at Google in the finance group, and then he would come and fly down and perform in Colombo. So I would come down with him a couple of times. So I have a very very deep affection for Sri Lanka. So I just wanted to first express that. That was one of the attractions of being on the panel. And I can also relate to a lot of the things that Imal, you said about leaving corporate. Can totally understand that. It's a very hard thing to do, and Sachin, also the problem statement you're working on. For me, when I look at investing, I'm actually number one investing in people, and that's the reason I'm bringing it back to Imal and Sachin, is that the end of the day, the journey of being an entrepreneur is so hard and so long. You have to have a certain almost irrational motivation to do it. And not everybody is built that way, and not everybody is equipped to do the journey. You know, the expression I remember reading a long time ago is saying that, you know, like overnight success is 10 years of hard work. So, you know, when someone gets acquired, they said, oh my God, look at that, you just got acquired, you've only been running this company for 10 years. The journey always begins way before that. And not everyone has the tenacity or patience to go through the journey, because there's a lot of trials and tribulations. One day you're on top of the world, literally next day you're on the bottom of the world, and how to handle that emotional roller coaster. So often when I meet, I have a very sort of different methodology. When I meet someone, I actually tell them, I don't want to see your PowerPoint. I don't even I want to learn about you. What motivates you? What is your inspiration? And then why are you deciding to devote your life, because literally it's a devotion, to solve this particular problem? What is it about this problem? So for me, whether it's B2B or B2C, it's more of a founder problem fit than a product market fit. And I don't know if that makes sense. That may be a new expression, because you have to have a problem that resonates with you. You know, Sachin said, you know, he understood because of the language and how people were using. He understood that problem and it resonated with him, and probably caused him to motivate. Imal had a deep, you were saying, a deep devotion to Sri Lanka and what was happening in terms of manufacturing and what was being sold. So that's kind of what I look for more. And then once I have a better understanding of that, then I start diving into you know, all these kind of things. You know, looking at sort of the motivation, and also I look at one of the other things. I was meeting a startup yesterday. I also look for the ability to sell. I mean, it's a very important thing. Matching technology, background, so product market fit, but also the ability to sell to the market is sort of, I feel, very often looked over. So I was meeting a startup yesterday, and they actually hired investment bankers to help them raise money. And they're very small. And I said, if you guys can't raise money on your own, and you can't sell, you know, I'm not really sure how far you're going to be able to go, that you have to hire investment bankers at such an early stage when you're 4 people. So I don't know if that answers your question. I think I want to make it more conversational and not take as much airtime.
No, you know, I think that's interesting that, you know, for you, the most important part is actually, like you said, the founder fit versus the product market fit to a B2B to B2C, right? Having said that, though, in your portfolio companies, it would be really good if you have some examples that you could share with us, Gautam, in terms of, said, you know, this is a B2B startup, which I believe it has done extremely well, is doing extremely well, versus here's a B2C startup. Because I think we keep talking about the big names, you know, WhatsApp and Airbnb and Uber, etc., which has done phenomenally well in the B2C space. You're talking about you know, Salesforce and some of the other companies in the B2B space, right? So are there you know slightly you know, names that you lesser known names, but you believe have done a phenomenal job, because I think that's what the region would like to know in terms of you know, from your background and experience and expertise.
Yeah, one of the probably you know, companies I'm very, you know, you always have a favorite company of the day. So you know, just like you have just like the emotional ups and downs. One day the company is doing great, and then that's your favorite. Next day it's not doing great. You know, I always say, like, almost like a favorite child, right? I mean, you love all your children, but some days you love one a little bit more than the other. So right now, one of the companies I'm very excited about is called Grafana. It's a B2B data analytics company. And you know, I was lucky to be one of the early investors in that company. And you know, they've done phenomenally well. And it's very focused on data analytics. Not a very sexy space. And more on, and not even data analytics, time series data. So like almost monitoring real-time data for manufacturing and things like that. So those live dashboards you often see when you walk into some manufacturing company, that's showing, you know, how the line is going and what's happening. So they take all the different data feeds and sort of help you create your own custom dashboards. What's interesting about this company is it's open source. So it's very unusual. So they have, you know, I think they have over 100,000 customers, and then they're upselling things to help monetize a small percentage, you know, of those customers. That's how they're getting revenue. So, very interesting company. I also find often the super sexy companies, like you're saying, Airbnb and Uber, and this, they only become sexy when they raise a lot of money. These companies were not sexy in the beginning. There were so many people that passed on. Flipkart, I mean, to be honest, even I saw the deal very early. Flipkart, I didn't invest. Most of my friends did not invest. Even Uber was, widely passed on by many people in the Valley. So, you also have to sort of believe in the vision where this company can go. And, these companies obviously, Airbnb was favored, then unfavored. People said, oh, no one will stay in someone's house. So it wasn't sexy actually when it first started. So often these B2C companies, sometimes you have something, I call it the party round, where one person invests and becomes a very cool company, and everybody just wants to invest. They follow the herd mentality. So it takes a lot of discipline, which sometimes I don't have, which is why I also invest in funds, because funds sometimes have that regulated discipline, not to get emotional and join a party round. And sometimes funds do, but I try to diversify.
Great. Thank you, Gautam. Sachin, you just closed a round a few months ago. Was that a party round, or was that, what kind of round was that from a B2C perspective, right? You did get some really, really strong names to back you early on. So it'd be great to understand what, your experience has been in fundraising.
Right. It's never party when it comes to fundraising. Because,
it's only party for the investors. It's only party for the investors, but absolutely for the entrepreneurs, it's always a slog.
Yeah. And it's, so we've actually seen, I've seen this journey across different stages. So with respect to Innovator, it's a half unicorn, and it's a large company now. And then with respect to Niki, when we restarted, I restarted my journey from the scratch, and it's always what Gautam said, right? It's always a slog. Even if you raise that $100 million from SoftBank, it's still a slog, because at different points in time you are chasing different goals. And when the funding hits your bank account, that is when the race starts. And at the start of the race, you can't be partying, otherwise you'll just miss the race. And that's what the last few months have been. After we closed the round, right around that time, the whole Corona thing happened, and the whole market went for a toss. And despite and our focus during those times was to scale the business. So we scaled the number of geographies from 5 towns to now 160 towns in the last 6 months, and it's been like absolutely crazy journey per se. And we always are in a rush, because there are so many different variables, right? It is not just about the funding; it's about the market changing. It's about the competitive landscape changing. It's about the user preferences changing, and all of that put together, you're always in a turmoil. And yeah, long story short, you can't party.
Okay, thanks, Sachin. Imal, over to you. I think one of the challenges, I know, having spoken to founders in Sri Lanka, is actually funding, and the lack of funding for different stages, the small ticket sizes. So when you started nCinga, I know BOVCapital took a bet on you, but again, it's different from a slightly more mature market like India, where the over 15 billion was invested just last year, and we're still hearing a lot of closings happening this year, right? So it would be great to understand, what your lessons were, your learnings were rather, raising money in Sri Lanka, and what advice you would give to young entrepreneurs out there in the audience.
Yeah. So basically, when we started, we put our own money in. That's how we started. get the early customers in, right? So, and then we raised from the investors, and then of course we raised 3 rounds. So all the 3 rounds we raised, we were very cautious on taking money. I don't know whether it was, some people are telling me that I'm too conservative, why I'm not raising more, right? But I was a little bit always concerned, like, okay, I have to be responsible for, because this is other people's money, right? So we were always raising on small tickets, and then we did that like for about 3 times. So we were diluting also at a lower space. Always we were trying to look at investors who can bring in value, and also bring in kind of less trouble for us, so that we can focus on the business. Either they can get us into a new market, or either they can bring us good connections on the partnerships. That's what we were doing. Anyway, the other thing is, like, people were a lot going on building companies with exit in mind. Like, so I when people were asking me, okay, what is your exit strategy? Sometimes I say I don't have a strategy, because I want to build this for last, not to sell. Because if you're trying to build something to sell, then you are building the foundation, it's not solid, right? So we were always building a company with a solid foundation. So in that sense, we were like conservative in raising. We were also focusing on getting cash flows from the paying customers. So that's what we were doing. But on the other hand, I could see some of the startups, like example, Zelingo, right? So they started at a similar time than us, but they grew their valuations really fast, right? So in the same period of time, they were very good at kind of raising, and they were brave in raising money. So I can't say which is good or which is bad, but I have seen the both sides. I think if my advice to the founders is not just take the money because it's available, because anyway, sooner or later, if your foundation is not right, you're going to have trouble. And I didn't want to be part of those kind of situation where I was always conservative on raising funds in that sense.
Thanks, Imal. I've been a founder myself, and I think I'm slightly different from Imal and the rest of you. I never thought I'd get back into the corporate world. And after 17 years of being an entrepreneur, I joined Microsoft 2 years ago. And I think the only reason I did it was so that I could, leverage Microsoft's platform to engage with startups. And I do agree with you that personally fundraising is no fun at all. It's no party, and my advice now, having done that, actually I think I've made more money when I didn't raise funding, because when you did raise funding, you're managing your investors and the VC's expectation versus kind of being focused on positive unit economics. You don't have money, you have to make money to pay those bills, right? It's amazing how quickly the 30th of the month, the 31st of the month would show up. So Gautam, the next question is for you, which is, in India specifically, we've seen that B2C was flavor of the month a few years ago, with tons, millions and millions being spent, and investments being made. Then B2B, companies, SaaS companies, were and are still popular. But now we are also seeing a comeback into investments in the B2C space, right? What do you see if the change between what happened, maybe in 2010, 2012, time frame versus 7-8 years later in terms of investor appetite for B2Cs?
Yeah, I mean, in general, I find everything follows a cycle. So, something is hot today, not hot tomorrow. And I think, as an entrepreneur, you don't have to worry about that, because you can't follow trends, because then you won't have that long-term motivation, as I mentioned earlier. So, I think when, a sector gets very hot, then there's a lot of companies and people say, oh, let me see what else is going on, and let me look around everywhere else. But I think in general, B2C, has made a comeback. And what's interesting is I was an investor in a couple of D2C companies, direct consumer brands, and those have not really done well at all. Maybe it's too early. I'm not really sure about that. Yeah, I don't know if that answers the question, but I think, just basically everything runs in cycles, and you can't worry about trends and cycles.
Yeah, I think what I was actually trying to get to, and maybe Sachin, you have an answer for this, is that there was a lot more appetite for money from investors for customer acquisition over positive unit economics. Now I think I'm sure you've just been through this round of funding. What is the appetite that you see in terms of chasing money for on customer acquisition versus positive unit economics? I know you have a very interesting strategy, so it'd be great if you could share that, because the part of customer acquisition also feeds into the product market fit, because you've gone in a particular path in terms of acquiring customers, and then you've decided to change that. So maybe it's a different set of customers that you're getting. So the money that you have used to acquire the first set of customers, now you need to use another set of pot of money to acquire the other set of customers while you're achieving product market fit. So what has your journey been? What are your thoughts been, and how are you kind of being careful in terms of spending your money? I know that all of us today, definitely post-COVID, we are hanging on to any of the funds that we have, so that because you never know what's really at the end of the next couple of years in terms from a funding perspective.
Right. Well, I mean, we have a slightly different and more on-ground experience. When these around the start of the year, it was the focus was grow at all costs, and almost all my fellow entrepreneurs that I know, all of them, they actually grew at a super fast pace, and that was the focus back then. And then suddenly COVID hit, and everyone went into cash conservation mode, and more than around March, April, May, the questions were invariably around unit economics, right? And it was very interesting, because it is the best time to get to positive unit economics for a digital business, because the demand is so massive right now that it was a milestone that was achievable, right? But it wasn't even like 3 months, but the story has now changed completely again. I was just in a conference a call with a few of my other fellow co-founders, and 70% of them said that they are back to growth, right? And this is also the holy grail for all the investors as well, right? As in the whole point of investment is that they are looking for growth opportunities, and at the end of the day, even for entrepreneurs, the value creation actually happens when they are able to get to growth. And there's always a fine dance that you have to do between customer acquisition costs and unit economics. And we have constantly moved from point A to point B concurrent. Even we have also gone concurrently in the same direction at the same month. But at the end of the day, what really everyone really wants is a path to unit economics more than the actual realization itself, right? For example, if you're building a business that is inherently not sustainable, right? For example, take the case of Uber, which is still burning a lot of cash. Now that's a business which is hard to really stand on its own even at scale, right? And such businesses, you should be able to make an assessment as to whether or not it is possible to get it to a positive unit economics on day one. And that is an assessment that you need to do. But for businesses that have a path, a very clear, well-defined path to get to a positive unit economics, for them there is no bar. Yeah.
Thanks, Sachin. That's an interesting point that you make. I agree with you. In March, April, I think everybody was extremely anxious because they didn't quite know what to expect. And it's great to hear that investor sentiment, founder sentiment is no longer gloomy, or not. I wouldn't say gloomy, anxious more than anything else. And there is more of a growth mindset that has come in. Imal, from a product market fit, right? I think I've seen this in many product companies in the B2B space. You always have that one big customer who expects you to jump, and say, how high when it comes to product market fit, which is basically agreeing to kind of change potentially your own product roadmap to meet what they would like for you to do. And it's really tough because it's always a moving target, like you earlier mentioned that sometimes your product roadmap is for 12 to 18 months, and the sales cycle is 9 to 12 months, and so there is that constant juggle that you need to do. And I think this is a very important point for those who are in the B2B product business, in terms of figuring out what is that balance between sticking to your product roadmap and vision vis-a-vis the clients coming in and trying to add features on the fly.
Yeah, I think that was one of the very key big challenges we had as a B2B company, because initially when you started, that you don't have a brand value, you know very little about the industry real problems. Because in our case, like, we were all a set of IT guys, and I was coming from telco and Vijay was coming from more finance, and then we somehow ended up in manufacturing because we saw that was the niche. Then we hired few people, and then initial reaction was like when it was all sold on PowerPoint on the concept, right? But then you don't have the product when we were selling it, but we were good in selling. And at the same time, we were good in getting the trust of the customer, and we were really trying to deliver based on that. So early days, the customer would say that, hey, I know better than you, that this is the feature that needs to have, that will give you that, move the needle for the business, right? So, but there comes a day that when you have visited like 500 factories, when you have deployed in, across 5 countries, and when you have hundreds of factories on your platform, then we go and say, hey, Mr. Customer, we know this, right? So what you're saying is not the way to do. Just try it and use it and see where the result comes. It's always a question about the project versus the product, right? If you're doing more than 20% customization, or at least even more than 10% customization, then always you are in a change request game where it's more of a services work, and you can't get out of in and out of a customer within a few weeks or within a month. Then it's always a question. So it took us actually a couple of years to get there, because you can't reject those things. There is just because you have 5 features working, it doesn't mean that it can work on 5 different geographies in 100 customers. Because you need to keep on adding the features to a certain extent. And then there comes a time, once you have that, there comes a time where you can say no. Once you have that maturity of the product, there is no silver bullet. I can say that it depends on product to product, but it took us like about 2 to 3 years to get to that stage. So at earlier days, we had to take our gut feel. Either it was a large customer, because we decided that every market we go in, we go for the top 10. So that we know that once you got the top 10, we can go and say that, hey, if these guys are using it, they are doing the best practices, they are serving the best brands, so you can go and learn from that. So it took us like about 2 to 3 years to get there, to say no to the customer. And right now we can say, no, this is the way it works. You use it and see, right? And that's the approach we see. 10%, more than 10% customization, then it definitely a problem for us at this stage.
No, I agree with you. I meet a lot of the founders, and I said, I completely agree that that maybe initially when you're getting your anchor, customer, and if you get the right anchor customer, the ability to kind of get them to help you drive the product is very, very important. It's not that you're building a product in absence of that customer, but at some point, the two-letter word which is most important is no, right? I can't do this because you are going to change the trajectory. So you're right. 10% services is really very optimum, and anything more than that will no longer make it a product, but you move into the services.
Yeah, at the first let's say 2 years, we had even though it's a cloud product, we had multiple code bases in the product because different customers had different, because Bangladesh is like more volume driven, Sri Lanka more quality, and India is a kind of mix. So, and then Vietnam was a complete different. So we had different code bases, and after 2 years, 2-3 years, we could say this is the base product, right? Get to that, you need to go through that journey. I don't think you can do that from the day one, and there's no magic on that in my view, unless you are doing, like, if I do it for the second time, right? Like probably WebEx guys, they sold it to Cisco and then they came and founded Zoom, right? So they know exactly what to do on the second time better, right? But if you are doing it for the first time, I don't think there is any silver bullet to say this.
I just want to add something here. I think one thing that I've noticed, Imal reminded me, is that there has to be a lot of iterations that have to keep happening of the product all the time. And a lot of entrepreneurs are sometimes very stubborn and say, this is the solution, and not willing to be flexible. So as Mal said, he had different code bases and different things for different products. And I think having that flexibility and understanding that, it's going to take multiple iterations and pivots to get the product market fit, and that still keeps going. And even with a company like Zoom, I mean, they've kept, innovating and changing and, customizing, and, they didn't think, for example, a lot of schools now use Zoom. That's not how the product first started. It wasn't really started for schools or for parties or, Zoom birthdays or whatever. So everyone's been innovating. And I think, I also look for like entrepreneurs who have that flexible openness and that mindset and not being completely stubborn and sticking to it. But also at the same time, having the discipline, because sometimes you have to be stubborn and say, you can't just change your product for one customer because that may just be the exception case. So it's a little bit of a balance.
Yeah.
100%. I completely agree with you, Gautam, and I think it's probably I wouldn't say easier in the B2B space in terms of the focus, but I think on the B2C side, Sachin, maybe you can answer the question. Is that once you've achieved product market fit, you can't really you're not a services business, right? You have to bet on a particular vision for a particular period of time. Where are you in your journey as Niki.ai? When we spoke, you mentioned that you have 500,000 users right now, and really you'll probably improve on what you're doing, but you don't see yourself and acquiring more customers versus doing a huge change to your product, correct? If I'm not mistaken. So it would be great to understand what your plans are right now. Do you believe you've achieved enough product market fit where acquisition is really more where your focus is, and that's where you have going to use the money that you have raised? So I think that this is an important point for founders to know, when they're building their B2C business and looking to scale their B2C business.
Yeah, so, well, when it comes to product market fit, this is one thing that, of everything that I would like to say, this is one thing that I would like to say, that when it comes to product market fit, you can't fake it. And a lot of business do. A lot of business try to growth engineer the product market fit. There are like businesses that have raised over hundreds of billions of dollars. They still try to take that product market fit in order to be, because they are in some virtuous cycle. Having said that, it is also the fact that several businesses, they actually go through a transition where they have to look, where the goalpost for product market fit actually changes, and that could change because of multiple reasons. For example, the market has changed. For example, so if you take Corona as a particular case, it's actually changed PMF for a lot of businesses, like thousands of businesses. It is like overnight, it has changed the product market fit for them. Similarly, if there is a large competition that enters your space, the fit that you have with respect to your market, that actually it can change overnight if the users actually get like a very, very distinctly unique result, distinctly unique offering at a much more competitive price point, right? So that product market fit goalpost actually changes in that context. And it's very, very, very important for businesses to keep measuring that fit, right? And this is one thing that's actually not something that's talked about a lot, or not something that is actually understood a lot, right? How do you really measure product market fit at whatever stage of the business you are in? How do you measure product market fit? And we were actually dabbling on this for ourselves for quite some time, and then we set aside a few set of thumb rules through which we can actually say whether or not we have a product market fit at some point in time, at any point in time, right? And that's something that we worked extensively towards. But to sum up, what I want to say is that the goalpost changes.
Thank you, Sachin. Thank you, Gautam, and thank you, Imal. I think this has been a very, very useful session. This is a series of webinars on building products that users love, and I think the product market fit is a very, very important topic for all entrepreneurs. And I think like Sachin said, the goalpost changes, but coming back to what Imal mentioned is at some point you are the boss. As the founder, you're the one who understands the space more. And to kind of sum up what Gautam mentioned, saying that you can't be too rigid. You need to constantly be relevant and understand what the market is asking for before you make your changes. As a final point, I think personally, I do believe product market fit is when someone is willing to pay money for what your product does, right? I just don't understand, when people keep building, products and no one is willing to pay money for it. And my advice to every founder is find out whether it's B2B or B2C. If a stranger who has a business problem that you're trying to solve is willing to pay for it, not your uncle, not your friend, not somebody else, right? Go do the tough thing in terms of finding out whether they are willing to pay and continue to pay. And I would refer you to other people in the business. That's when you have a decent product market fit, and listen to your customer in terms of what it is, and spend the time to prioritize and to see, is it a common complaint that you're hearing or a common request that you're hearing across from your customers to achieve product market fit. A big thank you to Hatch and to BOV for bringing this together. We look forward to having you participate. This is the next session will be on the third Wednesday in October. Gautam, thank you so much for joining us from New York. Imal, congratulations. Very happy, on the news of your exit. And Sachin, keep doing what you're doing. I think you have a fascinating business. Like you said, there are hundreds of millions out there who are looking to leverage what Niki.ai brings in. To the audience, thank you for listening in, and we look forward to having you participate in our other series of webinars. Thank you, everyone.